Morning. Welcome to the Wavy Tunnel PRO Market Outlook for 26th of May. I hope everyone had a long, good and enjoyable weekend. So before we start, if you can just take a second to read the disclaimer that the presentation is for educational purposes only. Anything I say here is just based on experience and my visual perception of what I see. And that's it. So what's in store for us today besides the usual rhetoric, and that's it. This is everything that's dominating at the moment. The Middle East. Are we, aren't we? Some attacks overnight, but rather muted price action based on that. So the market is convinced there's a peace deal in the offering. So therefore, it's just got to stop because it's causing chaos in the markets. So the words in all of these, this is what we're dealing with: inflation, caution, tension, Middle East. It just sums up where we're at the moment, where we are, and what is what. If you believe these inflation rates, they don't obviously take cognizance of the man in the street and the impact that it's having on him, hence why we're having a K-shaped economy. So the top get richer and the middle gets squeezed a little bit more. So economic data, nothing that's going to get too many people excited. Probably I would say the auctions come into play now because of the impact of inflation and the focus on interest rates. So that's going to be the key. Anything else coming out this week? You're probably going to start getting lots of Fed speak because we're in that period where they can say what they like before we go into the quiet period before the next meeting, which will be Governor Walsh's first one. So that will be very interesting. This Thursday will be interesting with PCE, durable goods, GDP growth. So that will be impact news. And then on Friday, more Fed speak and nothing else too much. So shall we get into the charts and go and have a look and see where we're at and what to expect for today. So let's start with the euro. I left everything blank for now just so we can have a look and see where we're at. And before we put anything on the chart, where are we? Now I've not touched any of these and we're still in that zone. So I can safely say there's not going to be much to go on here today because we trapped. Where are we going? We're in no man's land. This is a 4-hour chart, so there will be opportunities in lower time frames. So that's not a problem. Let's go and have a look and see where we're at. And this just smacks of news headlines and then periods of indecision. What's the glaringly obvious thing that's sticking out here? The gap. What do we know about gaps? They like to be filled. So there's your gap area. So now we know where we are. Let's have a look here. We've got breakout one trade that's probably on the board. So what I would do is I would just mark this one to see where we're at. And we can see that this one had achieved our target. We can see that we've got some open space up here. This is not a complete fill, it's a partial fill because the gap, you can see where it is, the close, and I didn't want to make this box too big, but there's your true gap. So there we go. So we've got a base. So 16 is our bottom, 1675 is our top. We're in some sort of crunch at the moment. We had this, the numbers just keep talking to themselves, you know, where things retrace to. There they are, our magic number. There was our target. You know, if I repeat this enough, then people will start getting the gist of it and try and, you know, implement it into their trading strategies in every day. So what I would do now is, because we've dealt with this one, so one of two things can happen. You can go and say, right, now there's our high, and this is what we're looking at currently. And so that's great, because now that gives us a better picture as well, because where's our target? Up in that gap that we've identified, that's glaringly obvious up here. And so we've said 1675 is a level. We're looking at that. So now that's on our chart. Where's our correction zone, our sweet spot? At the bottom of this fill the gap. So that is your range. 1675. You break below here, then we come in to test this low here. So that's what we're looking at the moment. I would probably, although I've got that as a target, I'm just looking to the left and looking at that there, so you can see that the target range could be between 62 and 75. So like I said to you, this is a 90% probability. So when it's not 100%, you know, there's too many things that can influence it. So that's your euro all mapped out for you and ready to roll. I'm going to think that sterling is going to be very similar. Go to the 4 hour. Let's have a look at the bigger context. And very similar, not as pronounced as the euro. Bit flaggy. So what are we expecting? One more up. What am I going to do? You know what I'm going to do. We've met our target there. I'm going to extend that a little bit, and we've met that target there. So we had first impulse correction, second one broke the high, correction. So use the wave as your trend line. I'm just connecting the lows. Why don't those work? There we go. That's my trend line. What I do is I take the low and the high. I made a higher high, so I connect those two lows, build my trend line in. That coincides with the wave. So now I've got an area in here. I would probably extend this to the top and just say, right. So what does that coincide with? It coincides with 38 to 50% retracement. Here it is. And area of support. So there's your first level. We're long, as long as we're long above that level, so 133. Where are we targeting? I've got an initial target there, and I can see another area up here. So you've got this high, that high, and so there. What's waiting for us up there? Higher time frame tunnel. So the wide one is 133, 130, but so let's move down, because we don't like too wide a range. What have we got on the hourly? So on the hourly, horrible price action, mulling around this wave, looking for some direction. There's gaps, and so that's always the thorn. It was a holiday in the UK as well yesterday, so there are going to be gaps. Price action. So at the moment, look to the wave, and is the wave going to cross the tunnel? So this becomes your area of interest. You're looking to see price behavior in that range. So we'll make it easy. So if we start closing above the top of this box, we're going to go and retest the highs. If we start closing below the box, we're going to come back down into this gap area that we're waiting to be filled. So that's what I would be looking for on sterling. We can see at the moment it's looking like it wants to break a little bit higher. But again, we're susceptible to tweets, and you're going to get them now because people have been away for 3 days. So they're going to come fast and furious today. Watch the times, because they always come at a similar time. So when 5 o'clock, US, 5, 6 o'clock US time, they start coming. So, and the themes seem to be the same. US say, we got a deal. The Iranians go, we haven't got a deal. So until this actually settles once and for all, we're susceptible to these. So you need to be mindful of this and very, very careful. So that's your levels for sterling. Let's have a look and see what we've got on the Canadian dollar. Grind, grind, grind. So where are we? Right, so we're grinding for to retracement levels. The first thing that jumps at me straight off this, you're going to start getting used to this now. There it is. So there's the top end. Look at this. So this is a good example of, and this is what we've got now on the euro and the sterling in reverse, where the wave is trying to cross the tunnel. So you get your area of decision that you have to make. And there it is. We said we break out, we go to the top. We break out, we go to the low. So we had that on the euro, we've got that on the sterling. So here's an example of how that plays out, and you can see it very, very clearly on the Canadian dollar. What you could have done as well. Let me see if I can grab this. No, I can't move. So what I was going to do is move this to this, because this is doing the same thing. Then the breakout came and off you went. So grinding higher. Is that a sell indication? No, it's not. You've got 45-degree on the wave. You've got the tunnel turning up. This is starting to show signs of wariness. Divergence is supporting that theory. So what am I liking? I'm liking this blue box for a reversal and a continuation. Where's my target? It's way down here. There it is. There's my target. So there's your Canadian dollar. I won't go into too much detail on this because it's grinding. So you can see, but you've got to go into the lower time frames now to see where this possibly could be flipping over, turning, and just map out the lower time frames and go and see where we're at. There was a gap. So here's an example of a gap. That's all filled. Don't have to worry about it anymore. It's gone away. So great. We can just focus on the chart. You can see that this is oscillating around the wave in the tunnel. Wave is going to try and come through, go slightly higher. What are we looking at here? So we can see, right, let's pay some attention here. We've had a move down, we've had a correction, we've moved down, we have made a lower low. So I would be watching this level here for closes. And what does that coincide with? This breakout here. So this is around 138, you can observe. And we might pull into this, fill the gap, and have a look and see. And then the bungees will all roll over and come down to the bottom end. What have you got here? Continuous divergence. Aussie yen, which is used as our proxy for dollar yen. So let's have a quick look at dollar yen. Because of the dollar strength, you're going to have this move in the yen. Here's your gap. So you have the close and the open. Is that valid? It's filled. We're not worried. It's all done. It's gone. So we can have a look at the chart and you can see what they're doing, right? You can see where the bouts of intervention were. You can see now what's happened. You can see how intervention has a short term. This is just pushing people back. Central banks don't win battles, they win wars. These are battles. So when the yen comes down to 130, you go, okay, they won the war. But they lose the battles. They don't win the battles. So that's what's going on here, pushing back towards 160. They're also not naive, and if there's dollar strength, they're not going to come and sell into dollar strength, because they would just be giving market makers and people, speculators, liquidity. So we look at the Aussie yen as our proxy, and you can see that that is now going higher. And let's have a look at the bigger picture. So this is our area of interest up here. There it is, which will coincide with 160 on the yen. So this is all clearly defined because you've got your first bout of intervention. This is a higher time frame. So you've got a wide base, you've got a thin top. What does that suggest to you? Well, we need to watch here, because you can see we oscillating around here. We in no man's land here. We're looking for some direction. Momentum's looking pretty strong here. So wait for your levels. Don't get involved in the noise in between, because that's chop up city. It will get you long at the top and short at the bottom. It's quite simple. So you go into the lower time frames and look for setups. Look to see what momentum's doing. Look to see how this is all supporting. This looks bullish. So, you know, in the lower end, it looks like this wants to correct this and get back into a 45-degree angle. The wave wants to start moving away from the tunnel again and follow price. So that's that. Let's go to the futures and see what we've got on our plate for today. Let me just find my chart. I was having some problems with it earlier. There it is. So, S&P. So let's just, let's stay in the hour. You can see I did watch prices yesterday just to see what was going on. I can see that if we not touch any of these boxes, I'm just extending them now because time is moving on, and I can do that. It's easier, it's quicker. Just change that date to 28, and so now we can see you can see your area of support. We've come into it. We obviously made new highs. We haven't got a 30,000. We came very, very close. So you know what I was doing yesterday. I was selling this because new round number, Iranians saying that there isn't a deal, Trump saying there is a deal. So it was a good opportunity to sell, and you can see the price action. But the market now needs clarification. Hence why everything is starting to flatten. So the wave is starting to, so we're going to oscillate in this area. What do we need? We need a close below 29,700, and then to have a fill the gap trade coming down here into this 29,400. The levels are quite scary if you look at 4-hour charts, because we have not corrected to any significant degree since the lows. And well, let's put it into a daily, because then you can see it daily. Nothing, nada. If we, and I will show you that now with the fib. Now if you look at that, Where's just a 38.2? It's down at 27,255. Wow. You know, markets usually, you know, like to have at least 50% correction. That's all the way down at 26,471. But what is that? That is a breakout level. Now we've got another box that we can watch for our interest, and that's on the daily. So there you go on the Nasdaq futures. So we know what we're doing, or we don't know what we're doing. Let's have a look and see what the options flow is saying. So you can see here, if you can't see that in red, call resistance is at 30,000. We stopped just short of it yesterday. There was a couple of goes at it. There was no liquidity yesterday. It was horrible, nasty markets. It was just try and make a few pennies and then turn it off and walk away. So we can see clearly defined ranges. So we need this 29,750, which has been supporting this morning. There's obviously all the news things that are starting to come out. So like this and the boxes that we have on here, what's this? Again, it's the same. And this is why now you start framing, you know, you've got all this interest in with your tunnel and your wave and the bungees and the awesome oscillator. Everything is supporting your thesis. You've seen where the trend is. You've seen the price action. You've seen where prices, you could see, you know, we talk about gaps in the markets where, you know, they open, and so like this gap here. So, and it's the same between the wave and the tunnel. It's a gap. And the principle is the same. Are we going to fill that gap? Because it wants to fill the gap. Markets want to fill those gaps. How do you fill the gap? You come down to the tunnel, or price goes sideways and the tunnel catches up to the wave. Those are the two things. There's only two things. So, you know, just be cognizant of all these things. Make a note of all these levels so we can clearly see now. So above 30, you can, the next area is 3,200 and then 300, etc., etc. I'm not going to say whether these things are going to get there or not, because I do not know. And so you just use them as a decision point in your thesis, in framing out and looking for possible entries. And your entries are based on, you know, the highest reward and the lowest risk. And that's what you're doing, to try and keep on the right side of things. S&P is probably going to say the same thing. There it is. So now here, this one is interesting, because it looks to me like the S&P might be slightly weaker, because we haven't made, let's just extend these because they're all valid. So let's just go back 28. They're all still valid. So we're fighting at this pivot area. So 75, 30, 40. Breakout level, breakout level. You know, when we say they come back to have a look and see what liquidity is like at a level where they break out, it's just to have a little sniff to see what's going on, what's happening. Flattening of the wave. What have we got? A gap to? So you can clearly see we start closing below 75.30, we're coming down to 74.75. What's below that? There's no box here, kind of. There's the box that we had there. So let's extend that, because that is an area of interest. So this is what you do. Frame it all out. You've got your overlay of the wavy tunnel system. See how that corresponds with your other analysis, and then the more that you have at a point, the stronger that it is. So what's happening now? You've got your box, you've got your wave, you've got your trend line, you've got an upper royal. So you're like thinking, you know, my odds of I might get another look back up here, but I think I might be wanting to go here. Obviously, we don't deal on think, and trading is a balance of probabilities, but you know, it's looking for the proper setup. What are the options saying in S&P? So like NASDAQ wasn't into its lower box, the S&P is. So NASDAQ was closer to this one, looking to come into this one, S&P's in this one. So again, we support the thesis. So on here, close below 20, so it's a nice close below here. So we've got a confirmation here, which is supported by here. What did we have here? We had previous areas. Look at the all the wicks here, and then there was the breakout. So on a price action basis, this is price action, not options. Oops. So on price action, I'm going to draw that box. I'm just going to add that box in and leave it. So if I come, you see, this what you know people talk about false breakout. So you might come in here, touch this one. This is why you wait for closes. This is why you wait for closes. Look at this. You see, went in here. Are we going to break this? Aren't we going to break this? Bang, close down here. So S&P looks a little bit weaker, but then all the talk is, at all the rage is about, you know, AI. So not surprised that NASDAQ is stronger. So those are your levels in the S&P. Gold, let's have a look and see where we're at. Well, so you can see I've done nothing. I've not touched any of these. The price remains the same. We're still in the zones that we've mapped out last week. Nothing's changed. So we're waiting for a breakout. So you can see the levels. You can see box to box. Above this one, into there, back to 46.50. Gold's got a conundrum at the moment. Doesn't know what to do. And there's been so much buying, a lot of central banks buying, but I think everything's on hold, and there's obviously a pause because of what's going on in the Middle East, because they might have to take some profits on some of their gold to fund the shortfalls that they're having on oil. So everything remains the same in oil. Nothing's changed. Gold, I beg your pardon. Nothing's changed. You know, you can see, you can't even see in the price action, because I'm trying to see here now if the buyers or sellers are in control, but you can see it's at levels that buyers and sellers are in control. And there's very little to do here, because when you're in no man's land, it's very difficult. Wait, be patient. Even the bungees are saying, we're not sure what to do now. We're going up or we're going down. We're at a decision point. We're at a decision point, and we're coming into a decision point. So break below 45.15 and a close, we come down to 44.60. If we hold, we go back to 46. If we break above, we go to 46.5. Simple. Not simple, but it's there. It's done. Don't have to worry. Let's make that 28. So now so nothing's changed. What is looking at it in the face of it? It looks like there's obviously. Look at this, very strong engulfing downward candle, but we've had them before, very strong, then a little bit of sideways, come back to go and test this. I would think that candle there and this price action here would be 70, my 707 or 75% retracement value. But what did that also come into? This area. Draw on your charts. oil. Perfect example of what we talked about when you break through. So great to see. Backspace 28. So we're coming back into this level now, and it needs to talk to us to see. This one is difficult because, and you can see the price action, you're just breaking below. What if we got here? We've got a gap. What's the gap supported by? Higher time frame and current tunnels. So this is your area. This is your point of control. This area here. Break back above here. Bang. Hold this. Bang. This is probably not one to be involved in. Too whippy, too messy, too susceptible. Like I've always said to you, in oil, market participants sell rallies in oil. Always. Always. So, just a little look at the euro on the futures, and you can see we've said this on the MT4 platform, that we tracked between ranges, and you can see we oscillating around tunnel. So nothing to report. Be patient, wait, and allow the market come to what you perceive as your setup and your critical area, and then that helps you. And you see how these always stay on your chart, because they're valid until they're not valid anymore. These are all still valid, and we've been doing this for a couple of weeks and it's still all the same. Nothing's changed. It's just an extra cover of protection for you in your decision making process. So I hope that all helps. Have a safe and profitable day, and I speak to you during the rest of the week. Take care.